Right. Howdy, howdy. Hey, folks. In fact, I'm going to move my mic over here. Let's move Facebook a bit closer so you can hear. In fact, 1 second, I'm just going to go and get a little box for the Facebook thing. Right, hopefully that works. Whoa. Okay. Don't know how this is going to... Right. Almost 12 o'clock. Hey, folks, can those on Zoom hear me okay? At this volume? Good, sweet. I saw a thumbs up there. Hey, YouTube. Hey, QWERTY Bertie QWERTY Burr, you're becoming a regular. I do love the names on YouTube. Everyone has a really random name on YouTube. It's funny. My name on YouTube is Siam Kid. Original. Right. Let's have whoa. Just giving it another minute, then we'll crack on. Hey, Facebook. Who do we have here? We've got, hey, Rosie, Adam, all in on Safe Moon. And Andy, hey, mate. I've got a bloody frog in my throat today. I'm so sorry. I'm going to be like frogging all day. I'm going to, oh, actually, yeah, rant. I'm going to have a little rant as well today. Rant. What am I going to talk about? Tradies. What else? Delightful. Hey. Howdy. Okay, so that's 12 o'clock. Let's get going. I know people are going to be filtering in. But yeah, let's just start. So today we are going to be talking about trading for basic, or I guess trading for beginners. In fact, trading for everyone, because the things I'm going to talk about will help even experienced traders. But before we do that, I just wanted to go through a quick Q&A on the WAP group. So for those on Facebook, you can't, in fact, you don't really need to see my screen today. However, I'm just going to share my screen on Zoom. So earlier, it got to like 11:30 or 11, and I just had no idea what I was going to talk about today. So I put out on the WAP group, what do you all want to talk about? So I'm going to quickly answer some of the questions that popped up on the WAP forum, and then we'll get into the trading stuff. And yeah, the reason we're talking about trading today is because today I had no idea what I was going to talk about. So I've defaulted to my comfort zone, which is trading. It's the thing I know most about. So I don't need to plan. Right. So basically, I asked the Wappers in the Facebook group, what do you want to talk about today? Matthew said COVID lies, lol. We may talk about that at the end. I don't want to lose 50% of you too quickly in this session. But the first, I guess, valid question is from Chris. Chris is here on Zoom. Hey, mate. Marketing, please. Not being a pushy type of salesman, being a salesman with integrity. And then before I talk about that, Mark Jones, fellow Wapper, also came up with a really good reply, and I do agree. He says, marketing and sales are two different things. Marketing is basically using a metaphorical bullhorn to broadcast a message in the hope of getting people to knock on your door. Sales is the art of using language to directly influence a person to buy something from you. If you're talking salesmanship, you're already on the right track by not wanting to be pushy. I picked up a new client recently, and on handover to my partner, they kept commenting on how refreshing it was I wasn't pushy with them. Benjamin Dennehy on LinkedIn is a really good person to follow. And despite his reputation, Jordan Belfort is also actually really good at selling if you follow him. Yeah, so I do agree with that. I've always approached sales and marketing in a completely different sense to most people, because people feel that you need both. But because I've become a bit of an introvert over the years, and I'm really anal with doing activities that have a multiplier effect. I just don't like doing sales. So, for example, if I was doing sales, like doing a one-to-one phone call, etc., that is there is no multiplier on that. So you'd be literally me talking to someone else, and yeah, I think it comes from the trading perspective. Like, as a trader, I'm obsessed with asymmetric trades. So something, placing a trade with minimal risk with an enlarged outcome. Okay, so that's what an asymmetric trade is. And it's the same with my actions and time. I only like doing asymmetric activities. So things where I can do something, but it has a multiplier effect. So, it could be writing an email. I mean, it could be like writing a marketing email, which goes in an autoresponder sequence, etc. That is an example of an activity with a multiplier effect. And so, because over the years since I left the Air Force, I am actually becoming a little seashell, I don't know, a recluse. I never leave this office, and yeah, I prefer animals than people, and and so I just don't like doing sales. And so I've always incorporated, I've always maintained that if your marketing is good and congruent, you technically don't need sales, which again is a very controversial topic, because you then, like, on one spectrum, you have Lord Musk, who says, I don't ever do any marketing. You don't need to do any marketing if your product's good enough, which I agree with. But he can only, you can only say that when you have enough organic eyeballs. So because he is a billionaire and he has Tesla, Starlink, and SpaceX, and all these other bits and bobs, he has a constant sort of, maybe not even churn, but he has constant eyeballs all over him. That's why he can sell a flamethrower, not a flamethrower, and sell $10 million worth of them in like 2 minutes. Like, Tesla released Tesla tequila a few months ago, and it came in a big old Z bottle, etc. And it was like $250 for a bottle of tequila. And I went to buy it the second it opened its shop, and it sold out in 3 minutes. Like, it is ridiculous. And so yeah, I agree exactly with what he's saying, that you can market. If your products are good, you don't need marketing, but it only works if you've got constant eyeballs. If you're someone that no one knows, if you're like the average Joe on the street that suddenly set up a business, and your product is, I don't know, you could be the world's best car cleaner and valeter. Well, if you do no marketing, guess what? No one's going to know you're the best marketer. You're the best car cleaner or valeter, etc. You have to get yourself out there, and so context is everything. So you do need marketing. Now, going back to what I did, I sort of said to myself, if my marketing is good, I shouldn't need to do any sales, because the way I approach marketing is not like Mark said, like it's a big old bullhorn to say, hey, look at me, I'm amazing, come buy my shit, buy my shit. That's what a lot of people do with marketing, and it's a bit shitty. And so I've always thought that if you're just congruent to your message and genuine, and not a pushy, sleazy salesman in your marketing, because you can be sleazy in your marketing, or go, hey, look at my Lamborghini and my boats and hose and stuff like that. That's incongruent and I guess immoral marketing. And so when you set up a business, your business should be screaming to a certain demographic. And if your demographic, like, for example, I don't want the mooners in my trading community, for example. If you're here trying to learn how to trade and want to make $1 billion in 2 minutes flat, I literally don't want you in my community. And so if you saw any of my videos, you're most likely going to be put off by them, because I'm going to say, look, trading is not going to make you rich. Trading is a slow burner. It's hard work. you've got to put in shitloads of effort. There's a monumental amount of things that you need to learn to trade. It's no different than becoming a dentist, literally. In fact, there are more heart surgeons or cardiothoracic surgeons on the planet than successful traders. Therefore, I'd happily say that trading is harder than being a heart surgeon. So being a successful trader is harder than being a heart surgeon. Controversial, but the stats speak for themselves. So I've always done congruent, honest marketing. And marketing, when I do the marketing, it's literally, this is who I am, like me or leave it. And then you'll get lovely clients coming through. So I don't do any sales. I don't do sales calls. I freaking hate it. Just simply because, a 1 hour Zoom call or sales call is 1 hour of no multiplier effect. So that's my thoughts on marketing. So for you, mate, I think you're a builder, so you build houses, etc. Your marketing message could be like in fact, your headline could be "Not the typical builder." I will turn up on time. I'll take my shoes off at the door. I will give you a quote and stick to it. I will respect your time. All that sort of stuff. Like if you shouted that, in fact, I'm going to find a really good example. So Adam Stevens heard me having a debt collection issue. Where the hell did he put it? Here we go. He had a debt basically, my marketing company did a job the other day, yada, 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 and the person didn't pay. So he owes me like £960 or something. It's nothing. I spoke about it in one of the live chats, in fact. And Adam, here we go, found it. Oh, where's the link? Here it is. And he said, and he passed me through to this one. Now, this is so we haven't used them yet, but I like what I see. So you can't see this on Facebook, but on Zoom and YouTube you can. I'll just read it out. But basically, this is an investigations and debt recovery business, and the wording is really good. And the wording on your website, you need to treat it as marketing. So the headline here is "You don't need a CC." Oh no, okay, it's a revolving. I can't read it. But basically, when some of the wording. Oh no, sorry. Let's go back to their main website. Here we go. You don't need a CCJ or High Court writ to collect your money. Business debt recovery, you are not a bank or an overdraft facility. Personal debt recovery, don't let them continue laughing at you. All visits are recorded, all that sort of stuff. And like when you look through, if your debtors are continually fobbing you off, yes, that's what happens to me. You want action and you're serious, then call the debt recovery experts, yada, yada, yada. And when you look through that whole website, the messaging is spot on. It's as though the whoever owns this business has been in my position before. They know how it feels that when someone is fobbing you off, etc. And so, yeah, that's good. But yeah, going back to Chris, like your marketing, yeah, I think these days the less bullshit you do in your marketing, the better, more congruent, and the better clients you'll end up attracting. So that's just my 2 cents. Then the next question before we get on to trading is from Adam Kaminsky. How to not give into negativity around us, look positively into the future, and see opportunities in this uncertain world we live in. Yeah, so the negativity thing is an interesting one. So I'm going through a pretty hard couple of months at the moment, business-wise. Literally, over the last couple of months, most of my businesses have started to stall, if that makes sense. As in, sales have just dried up across the board. Not just one business, like a whole bunch of businesses. And on top of that, like with the marketing company, someone's not paying. And I've got not really cash flow issues, because I mean, at any point I could just dive into my crypto portfolio and just extract some cash. So it's not that, it's the cash flow, as in the new cash flow coming in. Oh, cold coffee. That's horrendous. So it's nuts. And so negativity is something that seeps in. And so I always look at negativity like it's a little seedling. Okay, so basically, if a negative thought enters your head, it will breed and it will harvest and it will stay in your head and grow, just like a tiny little virus. In fact, negativity is like a mind virus, really. And if you let it incubate in your head, it will then, start pumping out the cortisol within your system. And cortisol has a very long tail, especially when you compare it to dopamine, which is a very short tail. So negative thoughts tend to lead to negative actions, and repetitive negative actions then turn into negative habits, and then all of that spirals into when you have negative habits, that then results in a complete permanent negative outcome situation. So it's like thoughts lead to actions, actions leads to outcomes. And so you really got to be careful about negativity. So I don't have any negative, well, no, I can't say I don't have any. Everyone has negativity, but I have. So I sort of open up my RAS to negativity, my reticular activating system. So my mind is chronically or acutely aware whenever a form of negativity comes in. So if I'm hanging around someone that's really negative, or someone that's bitching about someone else, or some stuff like that, I'll be very aware of it, and then I'll be like, okay, I just need to get this out of my life. Or if there's any drama, I'll exit. I have no time for TV soap drama in my life. And so that's so the way I get sort of re-ground myself is through gratefulness. I know it sounds really cheesy, but like I remember doing some survival, like escape and evasion survival courses in the Air Force, and some of these sort of survival exercises, you go without food for like 4 or 5 days. You're eating like nothing, and they're typically in winter, so you can't really catch anything because there's no like pheasants and rabbits running around. Your rabbit snares aren't really getting much. Like basically, you just go without food. You're walking miles and miles per day. You're freezing constantly, all that sort of stuff, and like just doing a week of eating no food and lots of walking and sleeping out in the cold with nothing pretty much. It really makes you appreciate the little things in life: hot water, food, stuff like that. In fact, I had a ritual every time I did a survival course. The first thing I would do is I'd get in a hot bath. So I'd buy a little tub of Ferrero Rochers, have a hot bath, and I'd simply just put the whole tub of Ferrero Rochers in the bath, and it'll be floating around. And then I'd literally just be like, and I would destroy a whole box of Ferrero Rochers. And every time I took one out, it would be all nice and melty inside. And then the bath is just full of like Ferrero Rocher wrappers and like chocolate all over my face. And so I'm genuinely still to this day grateful for hot water, and health and stuff like that. But in terms of looking into the future, this is the thing that keeps me constantly positive about everything, because we are literally sitting on the cusp of possibly the best and biggest revolution in human history in every facet that you can possibly think of. So if you go back to the 1990s, we had one technology which was on an exponential growth curve, which was the internet. And look what's happened to the world over the last 20 years due to one tech, i.e. the internet. Our lives wouldn't work without the internet these days. But now we are literally sitting, it's like 2021, we are sitting literally on that hockey stick, that parabolic part of the hockey stick of exponential growth, with multiple technologies all about to mate and shag each other, if that makes sense. So we have Internet of Things, Internet of Everything, 3D printing, robotics, CRISPR, i.e. genetic editing. We have really fast speed and data storage, like crypto, as in distributed ledger technologies, etc. Drones, robotics. Like there's so many things that are about to go nuts, as in exponentially nuts. And as they all do that, they're all going to mate and interlope with each other and come up with some freaking awesome things. And so there's so many opportunities, so many. I've got so many business ideas that you can do in the future. And it's a case of, picking one. And I've got one which I'm going to go head first into, but it's about 2, maybe 3 years away. And like, and I think now is the time to really sort of prepare for that. So when I go large, I want to raise like £10 million to get this project going. And there is a bit of a first mover advantage thing with this. So I used to talk about this business idea and model a lot, as in a lot. Look back at my videos a year ago. You'll probably hear me talking about it a lot. But I'm keeping my mouth stum about this now because there's going to be an element of first mover advantage. So yeah, we'll see. But yeah, anyway, Adam, that's how I deal with negativity. And yeah, just beware of cortisol. Cortisol is the stress hormone. When it enters your system, it loiters around your body for a while, and it's hard to get out. Whereas, yeah, and so I just try and stem the negativity as fast as possible. Right. So that's enough of those questions. Let's get into the reason why some of you are probably here, which is trading. Yeah. So I've picked a bunch of random things. So we're going to talk about the 5 typical blunders that people make with trading. 3 tips to help you become a better trader. So without further ado, let's crack on. So where do I start? So 5 painful blunders to avoid. Now, I have no idea people's trading ability around here or knowledge, so I'm going to keep it relatively basic. In fact, looking at the list here, Alex Haristov is here. Okay, Alex he's been trading for years, so this is going to be really bone boring for you, mate. May as well leave. So first one is trading without stop losses. If you're a beginner. This is just a mental thing because you'll probably, like a lot of beginners, they'll start reading forums and stuff like that, and they'll go, oh yeah, only newbie, don't trade with stop losses, you'll just get stop hunted and all that sort of stuff. And the thing is, although I personally don't trade with stops sometimes, I've been trading for 16 freaking years and I sort of know what I'm doing. But if you're a newbie, a fresh, brand new person, trading without stop losses is going to absolutely screw you over, because you as a newbie won't know how to control a runaway trade going against you, whereas I can hedge stuff. I can hedge my way out of a bad trade, whereas a newbie won't. So you absolutely need a stop loss if you're a brand new trader. It's pivotal because that way you can then you know your risk to reward ratio the second you enter the trade. So if you're only prepared to lose £10 on this trade, you put your stop loss in the correct position, and the worst thing that can happen is you'll lose £10. That's the worst thing, not end up losing £100, etc. So trading without stops, if you're a beginner, is a blunder. The next blunder is overexposure / over leveraging. So they're 2 different things. So overexposure in terms of assets is one thing. So I'm a currency trader and I see lots of new currency traders. And with currency trading, you trade in pairs, okay? So like you can't say, oh, the pound is strong today. Well, is it? Well, against what? Is it the pound against the euro? Is the pound strong against the euro today? Or is it strong against the dollar or gold or Bitcoin? Like you can't just say one thing is strong. Like everything is relative, okay? Because the pound could be strong against the dollar, but it could be absolutely crashing against, I know, the Swissy. Like, so trading currency, in fact, all trading is in pairs. Even if you're a stock trader, like people say, oh yeah, I trade Apple and Amazon, etc. Well, whether you know it or not, you're trading a pair. So if you're trading Amazon, you're actually trading Amazon against the US dollar or Amazon against the pound or whatever your currency you're trading in. So everything you trade in is in a pair. Now, when I talk about overexposure per currency, what I see happening is, like if we take the euro pairs, so you can have euro against the dollar, euro pound, euro kiwi, euro Swissy, euro loonie, like basically all euros against all the other sort of currencies. Now, because the common denominator there here is the euro, when you look at all of those, let's say those 5 charts, you'll most of the time see the same sort of pattern. So some people will be looking for a certain setup or a pattern and go, oh, there it is. I'm going to go long, as I'm going to buy, thinking it's going to go up. And then what will happen is they'll go, oh wow, look at this one, and they'll buy or go long on 5 different things. thinking, oh yeah, I've got 5 different trades here, but you haven't. They've really overexposed on the euro there. So what will then either happen is you will either make shitloads of money because you just lucked it in, or you'll end up losing horrendously because all of those, if you got the call wrong, all of those 5 trades are going to bomb out. So that's overexposing per currency. I guess you can then overexpose in terms of risk. So some people will scour the internet and they'll come across the 1% rule. A lot of people these days say, oh yeah, only risk 1% per trade, which is all relative. It depends on what you do. But let's say you're doing 1% and you go, okay, I'm only going to risk 1% of my total account per trade. So what this means is, let's say you have, I don't know, £1,000 in your account, times 1%, so 10 quid. You're only going to risk 10 quid. But what they'll then do is go and place 20 freaking trades. So you're then overexposing in terms of risk. So they're like, oh yeah, I'm only placing 1% per trade. But then they go and place 20 trades. And so what they've actually done is exposed their whole account to 20% risk. And guess what? You can lose 20 trades in a row. I've done it. Yeah. So I got something stuck in my teeth. Sorry. It's still stuck, but we have to bear with it. Sorry, 1 second. It's really annoying. So, yeah, so that's overexposure in terms of currency and risk. And then there's over leveraging, which I'm sort of putting in the same bracket here. So over leveraging is basically betting too much per trade, in essence. So you're basically risking far too much money on a particular trade. Yeah, so that's number 2. So far we've got trading without stops, and then overexposure and over leveraging. And the problem with over leveraging is that if the trade goes against you, you could just get margin called if you're not careful. So if you place too many trades betting too much money, then game over. I guess another thing you could do, another part of overexposure is just placing too many trades full stop. Just not a good idea. Number 3, I would say, is lower time frame trading. So basically people dick around on the lower time frame charts far too much. So when I say a time frame, when you're looking at a chart and it's, say, the daily time frame, every little candlestick, it represents a day's worth of movement. So every day you get a new candlestick. Whereas if you look at, say, the 1 hour chart, every single day, so every single hour you get a new candlestick. Well, for beginners, you should really only stick to the 4 hour chart and the daily chart. Really, that's going to be the safest operating environment for you until you really understand what you're doing. But what a lot of newbies do is they just they're obsessed with the 5-minute chart. So every 5 minutes there's a new candle, and it's exciting and things move fast. But what you don't understand is that there are a lot of people that teach trading have a thing called an IB agreement, an introducing broker agreement, where they get a percentage of people's trades. So if you're placing a trade and, I don't know, you're generating £5 in commission to the broker, that person with the IB agreement will get a percentage of that trade. So of course they're teaching you to trade, the 5-minute charts, so you drum up more fees. So that's one of the incongruencies in this trading malarkey. So yeah, don't play with the low time frame charts, because it's just all noise. And also some people look at like a 5-minute chart and something will happen and go whee, and like a massive bar will happen. Oh my god, it's exploding. But in reality it isn't. You just zoom out to the daily chart and you realize nothing has happened. So yeah, so that's 3. So playing with the small time frame charts. I guess this 4th one is really for crypto mainly, but it's buying and surging. So it's buying in surges and selling in dips. So what a lot of people do is they'll see that a market is really starting to surge, and then they'll buy into it. And then when it starts crashing, they'll be like, oh no, and sell. And if you get into that mentality or that habit, you'll end up hurting yourself. You have to do the other way around. You need to sell in surges and buy into the dips. Now, crypto is a bit different because you may not want to sell, but typically with normal trading, if something is surging really fast, that's a good time to exit because you'll always have a retrace, nearly always have at least a 50% pullback, and then you buy in pullbacks. So that's number 4, and the biggest blunder I see everyone doing, and I screw this up myself, and sometimes, and this is fundamental analysis whilst technically trading. Oh man, I have lost so much money to this blunder, and because I'm an idiot, I still make the same mistake. So what I mean by this is you have 2 types of trading. You have fundamental analysis or analysis, two main types of analysis. Fundamental analysis, which is the why stuff happens, the underlying reason why stuff goes up and down. And then you have technical analysis, which is simply the study of the charts. Okay. So for example, I use this, the hurricane analogy a lot because it's the easiest thing. So if you saw a hurricane brewing off the coast of, Florida, tracking towards Florida, it's then highly probable Florida is going to be wiped out. All of the orange groves are going to be destroyed. And therefore, there's going to be a shortage of oranges, therefore a shortage of orange juice and oranges. And therefore, the price of oranges will then shoot up. That would be a fundamental analysis. Okay, that's a way to look at that. So another way would be like Elon Musk is presenting Saturday Night Live on the 8th of, oh shit, it's tomorrow. Sweet. On the 8th of May, so tomorrow. And so it's highly likely he's going to probably say something about Dogecoin and moon it even further, maybe. So that'll be a fundamental type of thing. So you're trying to sort of anticipate why stuff happens, or if the Federal Reserve suddenly prints another $10 trillion, it's going to push stock markets even higher. All that sort of, that's fundamental analysis. And then technical trading is literally looking at the chart, looking at patterns on the charts and candlesticks and how the price is moving, etc., and then placing a trade. Now, the biggest error, in fact, the error where I've lost more money than sense is using fundamental analysis for my short-term trading. So here's the thing. Even if you're trading on the daily chart and your average trade lasts anywhere from 1 to 4 weeks, that's still short-term trading. And so what I've done in the past, and I still freaking do because I'm an idiot, is, I'll have a view. Like, so oil is the prime one. Like, there's no reason on earth why oil should be hovering around $60 a barrel. Like, when you look at all of the fundamental reasons, all the fundamentals out there, oil should not be at $60 a barrel. It should be around 20. And so what did I do last year? I shorted oil. And then the market kept going up and up and up and up, and then I got margin called and I lost like 100 grand. So, and it's the same thing with US stocks. I had somewhat of a flawed mental model around stocks. I thought, okay, we're going to have another retest that March 2020 low, and I started shorting it. So I was using short-term trading and so here's the thing. When you're short-term trading, even if you're holding trades for a month, like, do not listen to the news. Don't watch the news. Don't look at fundamentals, because you only use fundamentals for things that have sort of more than a 6-month outlook. This is, I cannot stress the importance of this. Fundamental analysis and news is completely irrelevant to your short-term trading. Like a prime example, I remember sometime last year, a news announcement came out on, I don't know, BBC or whatever, and it said the UK GDP plummets, unemployment through the roof, yada, yada, yada. It was like the most bearish news ever. And so I saw loads of people on the internet going, oh my God, we need to short the FTSE now. And I was like, no, don't do it. And guess what happened? The next day, the FTSE rallied 20-ish%. And so that is a prime example of using bloody news to try and trade. So yeah, buy the rumor, sell the news is, somewhat valid these days. So yeah, that's the biggest blunder. Right. So what was the title over here? The title is 5 blunders and 3 tips. Okay, 3 tips. It's going to be really boring, this first one, and everyone hates it, but it's the magic silver bullet of trading, and it's logging. Yeah, I know it's really boring. Log. You got to log your trades. Every single trade you do, you've got to log it. And when I say log it, you need to record everything from the time you went in, whether you're buying and selling, what you're trading, your entry level, where your stop loss was, your take profit. You need to take a screenshot of the chart of when you enter the market. You then need to take another screenshot when your trade closes, and then you need to take another screenshot 60 candlesticks later, so you can see, oh, what would have happened. And even if you're doing a bad trading method and you just keeping on losing, you need to continue using that losing strategy until you have a relevant data sample of at least 100 trades in a year's worth of data, because then you can then tweak a few things and very easily turn a losing bad system into a winning system. So you've got to log, and the screenshots are so important because they tell you everything. Although I'm a numbers person, if you show me a spreadsheet full of trades, I'll be like, oh, that's horrendous. Whereas if you show me a whole bunch of screenshots of entry and exit, that tells me everything I need to know, and I'll be like, okay, so you should do this, etc. So logging is so important, because what that gives you is stats, and trading is simply a stat activity. It's all about statistics. So, and you'll then quickly see, oh, okay, I lose money every time I do this. Like, basically, the questions that run around my head when I'm reanalyzing my trading is, how do I win more from my winning trades? How do I lose less from my losing trades? How can I increase the frequency of my winning trades? How can I decrease the frequency of my losing trades? Are there any patterns to all of my losing trades? Like, there's so many little questions. And so when you have your log full of pristine stats, even if it's a losing trading strategy, you will be able to rectify stuff. Am I getting in too early, getting out too late? All these sorts of things. Is my stop loss on average too big, too short, like too small? Like this, oh man, I could talk forever. So stats, because you then understand your expectancy. If you have your stats, you then you'll know what your expectancy is. So yeah, and trading is simply that. If you're trading with a system with positive expectancy, you will make money over the long run. If you're trading a system with negative expectancy, you'll lose money. Fact. Like, trading is not gambling. Trading, there's a very fine line between trading and gambling. Most traders that think they're traders are actually gambling because they're dabbling and they're not doing things properly. But the thing that separates trading from gambling is statistics. If you have maths on your side, you're not gambling. Just like a casino operator, some casinos are only 51% accurate. But guess what? That's positive expectancy. Flicking a coin is a neutral expectancy. That's zero expectancy. But yeah, you may flip a few coins and it'll be heads. You have a string of heads, etc. But that's still neutral expectancy. So the more times you flick that coin, you're expecting, for every pound you risk, you'll make £0 profit. So that's the first tip, logging. It's so bone boring, but it's the most crucial thing. Strategy hopping is the second thing. Those that strategy hop are the people that definitely are not logging, because what happens is a new trader, they'll find something online, go, oh, I'm going to use this moving average crossover system or something like that. And they'll do it for a month and go, oh, this is shit. I'm going to search the internet for another strategy. They'll do that for a month or two, and then it'll go great, and then it will go wrong. And then they'll just spend their life hopping from strategy to strategy. I spent, I think, the good 2 years strategy hopping when I first started trading. And you do that because you don't understand statistics. And sometimes strategies take a while. Like if you're doing a trend trading strategy, typically you need to give it at least a year to see if it's actually profitable or not, because the markets only trend 15% of the time. So most of the year it'll be choppy and going sideways. And so you could end up with the world's best trending strategy, and you'll probably just trade it for a few months and in a bad period. Like one of my strategies called the 2RTJ, and so it's a trending method. And I remember for the first 8 months of 2020, it was losing. Like 8 months down the road, like this 2RTJ method was like 3% down, 4% down, whatever. But in the last 2 months, things started trending, and then it ended up something like 6% up. Okay, nothing special, but yeah, that's what happens with trend trading strategies. So that's strategy hopping. That's number 2. Number 3 is basically expecting to get rich from trading. This is the biggest folly. People enter trading thinking they're going to make mad stacks and quick stacks, but it isn't the case. The sad, cold, brutal reality of trading is that it's simply an amplifier of the capital that you have. And it amplifies at a rate of how good you are at trading. So you could be a bad trader and it'll amplify your money in a downward sense, i.e. it will shrink your money, not amplify it. And if you're a good trader, it will amplify it. So you could be someone that can amplify your money at 5% a year or 20% a year. But here's the thing, if you've got a $5,000 account and you're doing 20% per year, it's going to take you a long freaking time to get rich. Long time. So this is why I think, this is why most people lose with trading, because they think they're going to make money straight away and they treat it as a cash flowing activity. It's not a cash flowing activity. It's only a cash flowing activity when you have shitloads of money in your trading account. That's the brutal hard truth. So yeah, making 20% a year on a $5,000 account is peanuts. Making 20% per year on a £1 million account, all of a sudden, that's pretty freaking tasty, especially as it's tax free the way I trade. So if you've got £1 million in your account, or no, just call it 100 grand. You've got 100 grand in your account. You're making 20% a year, or hell, 10% a year. That's 10 grand a month, 10 grand a year, tax free. Not a single penny of tax in that. What's 10 grand a year? That's £833 a month, tax free. All of a sudden, it's not bad. So then you have to. This then leads you into the. This is how I got into business, because I realized I was a good trader after about 6 years of trading, but I had no money. And so I then went looking for money, which is why I got into business. And then I realized if you put money, if you tie up or combine business and trading, it's deadly. As in not deadly. It's great for you. But I'm aware not everyone likes to get into business, etc. Business it isn't for everyone. But then you need to come up with ways that you can get more capital. And it's the same with crypto. Crypto is not going to make anyone a millionaire unless you start off with a lot of crypto. I'm pretty confident I'm going to end up being a crypto millionaire. But I started with, what was it, in January, I put £95,000 in, and that's now sat at £500,000. So that's great. I still find it weird that, got all that money just sat in, online exchanges. It's not good. But yeah, crypto is simply an amplifier. And, we're halfway through this bull market. It's likely to peter off and consolidate in, December, January onwards. But still, we've got a good, obviously it depends what you put in, but you still got a good 3 to 5x from now. Plop it into Cardano. That's easily going to 5x from now. So yeah, as I said, it's an amplifier. You put £5,000 in cryptos now, and you're likely to get 2, 3, 4, 5x. You're not going to be a millionaire. Right. I think that's everything. What was the title? 5 blunders, 3 tips. Yeah, that's it. Have I pissed on all of your dreams yet, everyone? Have I? Because that's pretty much the sort of the effect. I was really brutally honest to a crowd once. I think it was 2 or 3 years ago. There was an audience of I think it was 100 people there to learn about trading, and I was a guest speaker, and it was one of these multi-speaker events. And I was just cringing backstage of all of the freaking pump and dumpers there going, hey, you make $1 million. And I was the last speaker. I was the keynote of that whole event. And basically everything I said contradicted, the 5 previous, get rich quick con artists, in my opinion. And I don't think the event organizer is expecting that. They thought I would, they saved me on till last to try and, hopefully leave them uplifted and, trade or whatever. And I don't think I got an applause. I was like, and at the end of it was like, I spoke for 90 minutes or whatever. And I was like, that's it. And I was so brutally honest and saying, look, trading is not the way forward, blah, blah, blah. And it was like, and it was like a weird, like 4 people clapping. And then they put the music on and I ran off stage. So yeah, right. Let's I just saw don't be expecting a callback, Simon. Yeah, I actually don't want to be associated with that community, so it's good. Right, let's look at the cues, questions on Zoom first. Sam, yay, COVID lies, my favorite topic. Oh, everyone's asking for COVID stuff. Maybe let's look at the other questions first. Bijan, my mate was on a Sandy Jadeja course last year, and people are losing between 1 to 20k by over leveraging. Whew. Sandy was telling people to spend 10 to 15% of their pot. As soon as negative variance kicked in, people were, oh man, out of a group of 800, no one addressed the problem of over leveraging, and everyone lost money. Jesus. He was telling people to spend 10 to 15% of their pot. What, per trade? God damn, you lose 2 trades. Let's say you're risking 10% per trade. You lose 5 trades, you've halved your account. When you halve your account, you then need to make 100% ROI just to get to break even. Man, that is negligence. Jordan Peterson is great for keeping positive, worth looking him up. Yeah. I've seen a bunch of his videos of destroying feminists. They're I don't know if you've seen those videos, but him and what was the other guy? Ben Shapiro. He's quite entertaining as well sometimes. If you like Jordan Peterson, that Ben Shapiro has destroyed some. Yeah. Anyway, the Ferrero Rocher bath anecdote just made me laugh out loud. Tara, try it. It's really fun. Honestly, just do it. Honestly, this weekend, get in the bath, get a box of Ferrero Rochers, and have zero guilt. Just do it. Smash your face full of Ferrero Rochers. I think I may do it. The near future is going to be awesome. Yes, I agree. Alex, see ya. Rachel, but technically you only lose if you sell at a loss. Yeah, depending what type of trading you're doing. With cryptos, yeah, if it goes down, if you just hodl, eventually it will go back up, maybe. But with trading, like financial spread betting, which is what I do, etc., then no, you'll end up with margin problems, and then your account will get shut. I trade stock, not currency yet. Cool. Yep. Chris, spread betting is different from investing. You don't own the asset. You could easily get margin call if you let trades run too much. Exactly. That's why you need stop losses. Tara, picking up on a question last night in the trading mentoring session. Interested to know the length of time it's taken for individuals within RT community here to establish their personal skills and knowledge, a point where they feel they are consistently annually profitable. Ignoring the bot. Yeah, it's a great question, Tara. So I've been teaching for about 8 years, and I've taught thousands, and I can see the trends. So obviously, I have the maths classroom analogy. Like at school, you're all in the same class, in the same school, with the same teacher, the same age, same syllabus, same workbooks, same freaking uniform. Everything is standardized as up the yin yang. But still, at the end of the year, what happens with your maths results? You have a bunch of kids that do really well, a bunch of kids that do really badly, and the general majority that do average and get C's and stuff like that. So no matter how standardized and how identical the teaching and syllabus can be, everyone's going to get different results. Trading is no different. So I've been teaching the same thing, and I haven't really changed my methods, etc., for 8 years or so. And so obviously there's an element of people are just going to be shit traders. Some people are going to be great. Most are going to be average. Now, putting that aside, let's just take the small segment. And I would say probably 20% of people that learn how to trade are those that treat it properly. As in they're doing this and they're like, right, I'm going to learn this properly. And then they're going to invest in the time, etc. So if you then take those committed people, what I find is that they tend to bust through all the videos within 2 to 3 months, which is great. And within sort of 3 to 4 months, they're actually quite confident. I mean, hell, if you watch, my trading course is 60 plus hours worth of content. if you do 60 hours worth of learning on any subject, you're going to be pretty proficient. If I learned, like, I don't know how to weld. I've never done any welding. But I'm pretty sure if I did 60 hours worth of learning of welding and practicing of welding, I'd be freaking good at welding. I don't know, any random thing that I can think of. Yeah, anything you do 60 hours with, you're going to be pretty good. So after 3 or 4 months, people will be, they would have consumed all the content. They'll then be proficient. So they'll have all the base knowledge, like to a certain extent. So when you're learning something new, there's the knowledge hurdle, and then there's the execution hurdle. The knowledge hurdle is really easy. It's simply here's an amount of information that you need as a base knowledge, base level. And then once you have that, it's great. Like the amount of progress from getting more knowledge diminishes, if that makes sense. And so, in fact, if I draw a chart, sorry, Facebook, you're not going to see this. Where's Microsoft Paint? So my whole brain thinks in terms of charts. So I have to put a chart in here. So if we do amount of knowledge on so for those on Facebook, so the bottom axis is amount of knowledge, and the vertical axis is progress. And it's going to look very much like the Bitcoin distribution curve. Ooh, it's going to look like this. So this is with everything. I don't care what it is. When you're first starting out, there's going to be a critical amount of knowledge that you need. And so let's say from here to here. Well, and once you get all that base knowledge, extra knowledge won't really help. I mean, I've been around the business networking community for probably a decade now, and I've joined every networking group there is in the UK, pretty much. And I know of business owners that, I was at the same level 10 years ago, and guess what? They're still at the same level because they became knowledge junkies. They're always trying to learn the next new hack or thing or tip or trick, but they're not actually implementing it. They're not executing it properly, or, they're not understanding the proper context, etc. And so, yeah. So basically, going back to your question, Tara, let's stop share. I think most people actually, for those that are doing it properly, they're actually competent within 6 months, believe it or not. So for Tara, if you're doing the trading test drive, if you just learn the halo, which is very early on in those videos, hopefully you know it already, and become the halo queen, just know the halo inside and out, and that's all you're going to look for. Just do halo trades, and you'll be very proficient. You'll be very good. That's all you need to do. Guess what I do when I trade? The halo. That's pretty much all I do. Yet you have other people trying to do the halo that probably haven't learned things properly, and they're not executing properly, and they're getting different results. Yeah, so that's that. Rachel, I know the press have been haggling him to talk about Doge, lol. I don't short trade either. Prime example is Amazon Q1 earnings did nothing to their stock. Yeah, exactly. Chris, I lost on the FTSE when that happened, lol. Oh no. Rachel said, I need to get into doing this for educational purposes. Helps you understand your trading behavior, the probability of outcomes. They're chasing instant. Yeah. Again, here's the thing. For those that are wanting to learn how to trade, I've got a thing called the trading test drive. And like it says on the tin, it's a freaking test drive. So go to realistictrader.com, click the learn to trade for free, and you have 2 months free. And you get access to the first, I think, 30 hours of videos of the course for free. Literally, you'll be completely proficient on your own after that. And I think it's probably one of the last trading test drives I do this month, actually, just because it costs a lot of money to give this test drive out for free. A lot of people think, oh, you're just giving out videos for free. It's free for you. It's not. I've got a whole bunch of back-end costs. I've got to pay all the mentors to help facilitate it. And yeah, it's just, there's more to it behind the scenes, but yeah, I think I'm gonna maybe close the doors on the trading test drive for a bit. But yeah, so check that out. It's pretty cool. Stop share. Where was I? Looking at the questions. Bijan, yes, Ari Sandy, that was what he was doing. Could probably fetch up some screenshots for you. It's okay, mate. Was crazy, but really expect nothing less from Success Resources. Yes. I'm not a fan of Success Resources. More like scam resources. Rachel, I think there's also education/knowledge versus putting into practice to take into account too. Yeah, I completely agree. Execution is everything. You can learn something as much as you want, but putting it into practice is entirely different. Yeah. Cool. Okay, so let's look at Facebook. Let's have a look. It's hard to see. Adam says all in on Safe Moon. How's Safe Moon doing? It's hilarious. I put just, for shits and giggles, I put $2,000 into Safe Moon last week or whenever it was. And I looked last night and it's gone up like 60%. Yeah, sweet. So yeah, just look at the price. My $2,000 is now $3,700. Woohoo! So anyway, bullshit coin. Right, let's have a look. Any questions here? Jordan, hey Simon, do you do your own Facebook ads and marketing or outsource this to an agency and employee? I do it all myself. Oh man, the amount of outsourced agencies I've done for Facebook marketing is obscene. I've spent ridiculous amounts of money. And yeah, it's a hard one. I don't do that anymore. Right, so Stuart, can that be done on Coinbase with crypto stop loss? Not really. So no. In fact, the way that crypto works on all these exchanges, you can't really put stop losses in properly. Not unless you're margin trading. But yeah, at the moment, you just got to be a little bit active if you want to do that. Let's see. Right. Sukti, do you use software for your logging or just an Excel spreadsheet? So all of my trading life, I've used an Excel spreadsheet. And I literally just take a screenshot, put it in. And so on a spreadsheet, you can have tabs. And so every trade is a tab: entry, exit, after, screenshot. So 3 screenshots. And I've done that for most of my life. I have my own trading logging software, which my students use, we call it the RT log. It's something we built ourselves, but it's still got a bunch of bugs in it, which is frustrating. But yeah, we use that, and it automatically shows you like I'll show you one sec. I've actually got rid of my okay, one second. I'm just trying to open it up. Here we go. Share screen. So for example, I haven't updated this log for a while, so I'm gonna have to scroll back down to some ticks. Here we go. So if we look at any old trade here, show. So what's happening is that the log is connected to your account. So it shows you all the key stats up front. So this is Kiwi dollar, 4-hour time frame. I was buying it. I was going in at £11.17 per pip, 34 pip stop loss, exit, and it was a losing trade. So I lost 0.97R. So I lost minus 371 quid on that trade. And the chart is a dynamic one. So it shows you it doesn't take a screenshot. It's actually a movable chart. So you can see that I got in here. I went to buy. I got stopped out here. And then 60 candlesticks later, so I can see what happened afterwards. So that's pretty handy. And yeah, and then all the other stats there. So that's pretty cool. And then there's all sorts of different analytics you can do. So for example, we can look at leaderboards and stuff like that. I haven't actually looked at my log. I've disconnected my trading log for this at the moment, simply because I have I've drained my FXCM accounts and just plopped it into crypto. But yeah, so we've got some cool leaderboards here. So for example, Andrew Foster has made the most profit in the last 30 days. He's made £1,863. Good effort. David Dickinson's made £1,342. Ashley Brewster. Ashley's constantly up there. Ashley and Mark Adams, they're always up on this leaderboard. It's a nice one. Highest net R in the last 30 days is Matthew Smith. Oh, net R 0. Okay, that hasn't been updated. So yeah, there's some cool stats here. Anyway, enough of that. Right, what other questions were there? Come on. Okay, that's it. So any other questions on YouTube? We've got Delightful talking about negativity. It all starts with an awareness of having a negative thought. Yeah, I agree. Ruchi Vashista. Sorry if I've said your name wrong. Any ideas for exiting crypto in a tax efficient way? Yes and no. If you're trading crypto and doing lots of moves, every move is a taxable event. So you're already incurring tax just by doing that. If you want to get liquid without any capital gains tax, what you can do is basically put your crypto in as collateral in one of the crypto loan platforms like Aave or Compound or Celsius or one of these, and then just take out a cash loan of 75% of your crypto, and then you can play with that. So as it's a loan, there's no CGT on that. Or you can get a passport, literally just move all your business affairs to Belize or Malta or somewhere where it's 0%, or where there's a country where there's 0% CGT. But that's a massive ball ache. I think it costs roughly, something like $100,000 on average to sort of move your affairs to another country. So it's not for everyone. But a lot of people are doing, if you've, let's say, made $10 million profit with your crypto and you're sat there in the UK going, shit, I either pay 20% corporate capital gains tax, so £2 million in tax, or I can spend £100,000 or £50,000 getting a dual citizenship in Malta or whatever, and I'll save £2 million in tax. Maybe. So that's what a lot of people are doing. But yeah. Gregory Sajus said, Siam, any tips on managing your psychology? I know more now than I ever did, yet here and there, I still take trades outside of my plan. Yeah, that happens. 99% of them fail, but can't stop doing that yet. I know exactly how you feel, Gregory. You got to plan the trade the plan. You know that. But what happens is, So that question has already demonstrated that Gregory has a good understanding of trading already, which is good. And so when you trade, you should really have your systems, your methods, and you shouldn't deviate from those methods, because when you deviate from your trading plan, you're then opening yourself up to errors. And those errors will normally be the losing trades. And so what I typically do is just have two trading accounts, mate. I have a DIY savings, pension account, so where I do no silliness whatsoever. And 90% of my capital is in that account. So no silliness, whatever. My trading bot plays in that one. And then 10% of my funds in a gambling account where I'll literally go, be stupid, YOLO, etc. And so any trades which are outside of my trading plan, I'll just put in the gambling account. So that's how I get around it. And that's how you scratch that gambling itch. So that's it. How long have we been? An hour. Yeah, let's call it a day. Any last burning questions? See, this is what happens, by the way, folks. I'm doing these live sessions, and this is your opportunity to hit me with any question. I'm an open book. But then nearly every day after these live sessions, I then get a flurry of messages going, oh, Simon, what about this question, this question? I'm like, just ask me on the live session, because that's multiplier activity. If you ask a question now, I can answer it. And there's 21 on Zoom, 15 on YouTube, and 16 on Facebook. I can help like 50 people. They can all learn from that answer. If you private message me a Facebook question, like, one, I'm getting like 20 a day, and two, the answer is only helping you, not helping everyone else. So if you have a question, please ask them in these live sessions. So before we close, any burning questions? Oh, shit, someone's at the door. It's going to... Okay, bloody deliveries. Every freaking day is always during these live sessions. That I'm going to call it a day. Got to love you and leave you. Yeah, it's another parcel. Yeah, I'll do my rant another day. I'll see you on Monday. Got to go. Bye.